through my thoughts on Tenet Fintech's Q4 and Q1 2023 earnings, or sort of my thoughts from their MD&A. No, I never made a Q4 or year-end 2022 video, and I really didn't have anything good or that I felt comfortable saying. It became pretty clear to me after the Q4 conference call that I saw troubling signs. I thought Johnson Joseph finally gave some clarity on how they were going to get to their 300 million and 800 million per year revenue projections, and to me it was going to require hundreds of millions of dollars of investment in Canada and the US to get there, and I really started getting concerned, and many of us, about the solvency of the company. So I didn't have anything that I wanted to publish officially coming out of those earnings. So the only thing I'm going to highlight in this video about the Q4 MD&A is just their cash position at the end of March was quoted in that report as $2.5 million. So I'll come back to that, trying to make some cash flow burn estimates, and just want to highlight Johnson's or Tenet's comments back then that in the opinion of management, they had sufficient capital to meet their current obligations. And we see that wording change now with Carol taking over in the Q1 earnings. So China was maybe more difficult than we had, or I was expecting. They talk about things improving a little bit in the second half. So hopefully the company stays solvent and we can see some improvement in Q2. At the end of the China statement, they've always had these statements about revenue and how much is supply chain. So I finally decided to dig into and plot out quarter by quarter how much is supply chain and how much is coming from the insurance business. So that's a slide I'll show shortly and kind of highlight where I'm getting these numbers from. So before I break the revenue down, this is their slide of the revenue over the past couple years. I sort of track that myself in my spreadsheet, and the green typically would be my projections, and I don't have any projections. I don't feel like I have the ability to make any reasonable guesses at this time. If you look at their past revenue, we see, unfortunately, this sort of decline ever since Q1 2022. I think my years are just slightly off of that, so that's 2022, and this is the first bump of 2023. If you look at it quarter by quarter, we just have this new 2023 first quarter, and it's down lower than it's been the last 2 years, so nothing new there. So what I did spend some time, I went back through the last 5 MD&As, and on page 6 or 7 of the MD&A, you have this results from operations section, and they talk about either exactly how much is supply chain or what percentage. So that's where I get the data for this table. Now Q1, Q2, and Q3 are directly from the MD&A. And then we have the year-end numbers directly from the MD&A. This 81% is right from page 8 of. Now Q4, I had to sort of back figure these out. So take the year, subtract all the quarters, and you get the Q4. And I went back over these numbers trying to find a mistake, because this 13 million in insurance and other just seems like an anomaly, but I can't find any error, and it sort of fits with all the other numbers. When I sort of take the year, remove quarter 1, 2, 3, and get 4, the supply chain kind of makes sense, that it had taken a big dip from Q3 into Q4 and kind of a similar slight dip. The Q4, again, this number seems off, but if we look at the other insurance and others, it's sort of increasing and then sort of has stabilized between Q3 and Q4. Okay? And this percentage, which is back calculated, makes sense with the percentage of supply chain dropping to the 80%. That number is right in the report, and it clearly was much higher. These are right from the MD&A. So I think I'm right, but I have a little, this 13 number seems really weird. So the supply chain number looks like it took a big hit in Q4, and I didn't have time and was more concerned about solvency and hadn't realized that dip previous. Again, that's for the page from the MD&A. In the Canadian operations, nothing really new that you probably don't already know, but I want to start diving into cash flow. They talk about how much is being lost in the Canadian operations, but I don't really care about amortization and depreciation. I want to get into actual cash, so that's where I'm going with the rest of this video. I don't really believe, the money, the prospectus, I sort of view that as dead and not happening. The other private brokered that's officially dead. So I don't think there's any new cash. There's nothing sort of in the works directly that's going to get us more cash. The liquidity from Q4 was $2.5 million at the end of March 30th. That was in the Q4 report. And now we have, as of May 17th, it's dropped to 1.2 million. So we know exactly how much the cash has dropped. It's just, have they raised any money? And I don't think so. They talk about further reduction. So hopefully the numbers that I'm about to get into for cash flow loss will be improving over time, not getting worse. They talk about financial activities, those 351 convertible debentures. Now, they talked about them being from January 1st to May 17th when this report was probably put together. Now, I thought that these were already done. And when I go back to a press release as of February 1st, I think that money was all in. So I'm not fully sure if any cash has come in. I sort of didn't like that this was to May 17th. I would have thought this would have been January 1st to sort of February 1st. Okay? But assuming that this debenture revenue has already been accounted for, okay, they listed 250 million on March 30th. Again, this is in the Q4 MD&A. That date, the May 17th, the Q1 MD&A, 2.5 million, so dropped 1.3 million over 48 days. That's 27,000 a day or 0.8 million a month. Okay. So this is kind of my best guesstimate for how much cash they're burning. Now, I don't know exactly when they do payroll, so these 48 days may not be an even cash flow usage. So I'm figuring best case scenario, they might get this down to $500,000 per month. Could be as high as 1 million and hopefully decreasing. But I think that gives me a reasonable window. I've always wondered about getting money from China. So if they can be cash flow positive there, can they bring money back? And it's listed as one of their uncertainties. I guess it's a possibility, but we don't know for sure. And that's maybe just a general statement about life in China. So it doesn't say where this money is, whether it's in China or whether it's in Canada or North America. So cash flow loss, rounding, call it $1 million a month. Their shares were 30 cents when I started building this presentation. I think as of the end of May, they're down to 18 cents. And when I saw that 18 cents, I kind of had a little bit of a pit in my stomach. I quickly checked for press releases with potential not good news. I didn't see anything. That means their market cap is sort of almost cut in half. It's well under 20 million. So if they need to raise, 7 million just to finish the year, that's an incredible percentage of their market cap. So we'll have to see how Carol can do with, can she raise money? That's certainly a question mark, not a guarantee. And how does she balance, how much does she raise at these horrible valuations? Peace of mind versus trying to raise the minimum, have the share price increase, and raising money at $1 would be a lot better if they could get there, but that's a big if. Back when the company was around $1 with the private brokered money raise, it was much better ratios of raising money. Raising 10 million on a 100 million market cap is a much less dilutive than where we are now. So hopefully Tenet survives. Hopefully we can, or Carol can raise enough cash, and then sort of going back to where they're at. We really need to see the supply chain increase. They said it's not back to pre-lockdown levels. So I kind of view that as the 30 million range. So I'm really curious, what does not back mean? Is it halfway back? Is it, back to 25? Is it back to, has it doubled from 6 to 12? That would certainly really help or affect the interim CEO's ability to raise cash. Insurance and other is at least stable. So that's a good sign. So hopefully the company maintains its solvency, and this isn't the last Tenet video.